Hello, and welcome to part A of this training video on the key updates to the SBTi's approach to Scope 3 as part of the Corporate Net Zero Standard version 2 public consultation. My name is Hugo Ernest-Jones, and I'm the Value Chains Lead at the Science Based Targets Initiative, or SBTi. And in this presentation, I'll highlight some of the most significant changes to the Scope 3 target setting criteria. Part B will go into more depth on some of the key concepts presented. The full details will be available as part of the public consultation, where we invite your valued input and feedback. So with that, let's take a look at the key updates. There are three major updates to how companies approach Scope 3 target setting and progress tracking in the new draft standard. Rather than relying on a percentage-based target setting boundary, currently set at a minimum of 67% for near-term targets and 90% for long-term targets, this new approach explicitly incentivizes companies to prioritize action on the most relevant sources of emissions in their value chain. Secondly, acknowledging the challenges with accessing primary emissions data for activities in the value chain, this draft standard places greater emphasis on non-emission metrics and targets. This includes indicators like the share of procurement directed towards entities and activities that are aligning with global climate goals, or the share of revenue that's derived from net zero aligned products and services. Finally, recognizing the practical challenges companies face in establishing traceability for value chain activities, the draft standard proposes a more nuanced approach to addressing impact and substantiating progress against Scope 3 targets. As part of this, it introduces indirect mitigation approaches for cases where direct mitigation is not yet feasible. The key updates in this draft standard directly address some of the challenges that have been identified through SBTi and other research. Previously, the 67% threshold for near-term Scope 3 targets grouped diverse activities under a single target with limited focus on each company's most material emission sources. Now the draft standard adopts a more focused approach, prioritizing emissions-intensive activities and areas where companies have the most influence, such as their Tier 1 suppliers. This helps to ensure action is directed where it matters the most. In response to the challenges identified with value chain emissions data and existing Scope 3 target setting methods, the revised standard places greater emphasis on alignment metrics and methodologies. The alignment method works by tracking the percentage of spend and revenue that's aligned with net zero benchmarks, which are based on the sectoral decarbonisation approach, or alternative non-emission-based indicators, rather than relying solely on absolute reductions. The alignment method is also intended to be well suited for companies offering climate solutions, which may see a near-term increase in Scope 3 emissions. In response to the challenges identified around traceability and influence, the new standard provides greater clarity and flexibility in how companies can demonstrate progress. It allows interventions at the activity pool level, for example, the supply shed, where direct traceability to specific emission sources is not feasible. It also recognizes indirect mitigation approaches such as book and claim commodity certificates, where direct traceability is not possible or persistent barriers prevent mitigation at the source. Since these approaches are still evolving, the expert working groups will further refine the guardrails and eligible instruments to ensure credibility and impact. Now, let's walk through a high-level example of how the new Scope 3 framework can be applied. The first step is to complete a Scope 3 inventory according to the Greenhouse Gas Protocol. This helps companies identify the most relevant emission sources within their value chain to cover with company targets. Companies need to include all emission sources within significant categories which account for more than 5% of total annual Scope 3 emissions. They also need to include emissions-intensive activities, even if they don't fall within a significant category. And emissions-intensive activities are defined as those activities listed as being emissions-intensive by the SBTi in an annex to the draft standard. And this includes things like steel production, aluminium, agriculture, transportation-related emissions. that account for 1% or more of the company's total Scope 3 emissions, or 10,000 tons of CO2 or more per year. This step helps to ensure that companies are focusing both on what's material to their business and what's most critical at the global level. In the next step, companies must commit to net zero Scope 3 emissions by 2050 with interim 5-year targets. By 2030, suppliers involved in emissions-intensive activities are required to already be aligned or actively aligning, meaning they have set science-based targets. All other suppliers must align by the company's net zero target year. Over time, the definition of supplier alignment will shift from setting targets to demonstrating actual emissions reductions. We will consult on whether supplier alignment should be mandatory or an optional target setting method. Then, companies need to set targets covering all relevant emission sources identified in step 1. Emissions-intensive activities may require their own targets. Other activities in significant categories can be aggregated or have separate category level targets. The threshold for requiring activity level targets will be put to consultation. Companies can also set targets using absolute reduction, intensity-based reduction, or alignment methods. Finally, companies determine the appropriate mitigation approach. They're required to prioritize direct mitigation, meaning interventions that are traceable to specific sources in the value chain through a robust chain of custody model. This might include things like improving energy efficiency or switching to lower emission suppliers, commodities, or products. If full traceability isn't possible, companies may rely on emissions data and interventions at the activity pool level to substantiate progress against targets. For example, a supply shed from which companies source a specific commodity, or a downstream activity pool, such as the electricity grid powering the products that a company brings to market. When neither of these approaches is possible, this draft standard acknowledges the role of indirect mitigation as a time-limited option to drive transformation that's comparable to direct mitigation and relevant to a company's value chain. An example is the procurement of sustainable aviation fuel through a book and claim system to address jet fuel emissions. To ensure credibility, we're working with an expert working group to establish clear quality criteria and guardrails for the use of indirect mitigation. Importantly, offsetting is not allowed for Scope 3. Companies cannot use carbon credits to meet targets in place of actual value chain emission reductions. To wrap up, let's quickly highlight the key takeaways from today's discussion. Boundary setting is now based on a relevance-based approach rather than a blanket threshold, ensuring a more tailored and impactful target setting process. The new alignment method offers companies more flexibility in how they set targets, providing more optional pathways to reach their goals. And indirect mitigation is introduced for cases where traceability is not possible. But this concept is still evolving, and further guidance will be provided through the expert working groups to ensure clarity and effectiveness. So thank you for joining me today. Please refer to the draft standard and our website for more information. I'd encourage you to fill out our video feedback form to help shape future communications about the corporate net zero standard revision. And please also fill out the public consultation survey to provide your feedback on the draft standard. Both links can be found on our website and in the video YouTube description.